Riverside.
I really like it. Good stuff.
Welcome back to another episode of Stonkscast. We are on, I believe, episode 5 here. It is January 30th, 2025. The podcast for everyday folks, everyday degens, everyday investors. I am one of your hosts here, Brandon, along with my buddy Ethan.
Hey, it's me, Ethan. And I hear something in the background here.
What do you hear?
I'm not entirely sure.
Are you hearing ghosts?
My prop is not working here.
Oh no.
Come on.
Pause, please.
Okay. Go to the next segment.
Next segment. All right. So we have a jam-packed show for you this evening. Thank you for joining us again. Please like and subscribe, YouTube, iTunes. Tonight, we're going to break down the indices, right? So I basically just wanted to do a short overview of basically the different indices that many in the markets are using on a day in, day out basis, just to kind of, get a feel for where the market is at. So stocks can go up, stocks can go down, as we all know. But to get an overall picture of what the market as a whole is doing is really important, right? Whether you're an investor, whether you're a trader, it's good to know the bigger picture, right? So wanted to break down just briefly some of the major ones that most investors and traders are following. So first of all, the Standard & Poor 500, that's the one that most everyone understands, the S&P 500 as it's, referred to. Basically just follows the 500 largest companies in the stock market. So it's comprised of companies like Tesla, for example, which recently joined the S&P, and some of the larger companies that most people are going to know. So that's one of the indices that we have. Another one is going to be the Nasdaq. The Nasdaq is one of those indices that is actually the most active one. It's where you're going to see the most volume, and it's referred to as the Qs. QQQ, as it's referred to,
Q.
and then you have the Russell, QQQ. It's tech heavy, right? So that's where you're going to see, Tesla, Nvidia. They're going to hold most of the weight for that index. Another one's going to be the Russell 2000. Russell 2000 just simply covers the 2,000 smallest companies within the U.S. market. So that's another one to keep an eye on. The Dow Jones is another big one. I think it's been around the longest. It follows 30 prominent companies. It's one of the oldest indexes. And basically they never change it up. There's always just 30 in there. So you have all these different indices, right? But you can't trade indices, but what you can trade are ETFs. And that's where you get some of these tickers like SPY, like Qs, IWM representing the Russell, and then you have the Dow as well. And so if you are trading, if you are investing, these are markets, these are ETFs rather, that you want to pay attention to. If you primarily deal with small caps, for example, you're going to want to know what IWM is doing, what the Russell 2000 is doing. It's important to make sure that you're trading with the trend. You don't want to be going long in a market where the Russell 2000 is getting beat down. It doesn't exactly make sense. So that's just a little bit about the different indices that we have. And then lastly, the VIX, I think, is really important. I think a lot of people have heard of it, but may not know exactly what it is.
You're not talking about vapor rub.
I'm not talking about VapoRub. No, that's correct, Ethan. Thank you for
You're
that.
welcome.
With the VIX, you're basically looking at a volatility index, right? It's the expectation of volatility based on SPY options, based off Standard and Poor options. They basically look at the next 30 days worth of options, and based off of that, you kind of get different VIX readings, as it's called. And so why that's important to know is because when you see VIX spiking, basically what that's indicating is a lot of uncertainty on the part of investors, right? So, for example, we had a bit of a drop heading into Monday due to DeepSeek and some of the tariff announcements from President Trump. And we actually saw a spike in the VIX because of that, right? So it's something to pay attention to, especially if you deal with options. Generally speaking, if the VIX is above 25 in that 30 range, then there's a lot going on. There's a lot of fear, uncertainty. Anytime you see the VIX around 20, below 20, that's going to represent a stable market, right? And so for the most part, we've been very fortunate lately. We're below 20. But Ethan, I'm sure you remember during COVID, we had some insane spikes on VIX that were as high as 60, right? So that's just a little bit about the different indices. I think it's important to cover because, again, like I was saying, you want a full representation of what the market's doing. But with that, Ethan, I'm going to pull up the NASDAQ,
Okay.
the tech-heavy NASDAQ, and we would all love to hear your breakdown of the latest in AI, the latest in DeepSeek, and
Yeah. Okay.
kind of how that's impacted things over the past little bit
I'd
here.
love to, but my assistant actually just came into the room, and oh yeah,
Oh,
yeah, I'll get that. Thank you. Okay. Oh, we actually have a breaking corrections segment that we need to include.
go
We
for it.
had a wonderful listener recently that
Mm,
called in, and they let us know that we were wrong, and they sent in this correction,
ooh,
and so we'd like to thank R. Brandon West for the correction. Here I've got my show notes here. I did mean to write in about Trump coin. For those of you who
ooh.
do or do not know, the post inauguration episode, we reviewed Trump coin and the high spike and trough that was present afterwards. And we also showcased our crypto research PDF that is available for all listeners. And the one of the questions I grilled you about its utility. I grilled you about the white paper. We couldn't find one.
You did. Couldn't find it.
However, our Brandon West wrote in. I did mean to write in about Trump coin and you talking about a white paper and utility. On the Trump meme coin website, they explicitly outlined that the coin has no utility and is supposed to be commemorative. Also,
Mm,
this is a general note. Meme coins in general don't often have utility or a white paper. It's more just backing an idea than investing in a thing. So that was this week's corrections segment. So let the record stand, and
thank you,
we'll
Brandon West.
enter that into the record. Thank you, Brandon West. Thank you so much. Yeah,
That will be notated. White papers are like unicorns and meme coins.
that's right.
Noted.
And that's something
Noted.
that I should have made note of. Is that a meme coin is not the same as an altcoin, and an altcoin is not the same as a cryptocurrency. They all exist kind of in the same bucket in the same world, but there's nuance to each of those. But so this week, DeepSeek over the weekend and into this week has been getting making a lot of waves. However, it came to my attention via what about the China coin E? Oh, that's so great. That's let's see.
Oh, HOLO?
No. So this is in reference to a comment from a hater. It's we had someone write into the show and tell us that we misspoke. And
it happens.
It happens.
It happens.
They said that we were wrong because we said that China had released DeepSeek AI and not some company in China. Look, there's nuance to anything, but if I ever refer to a food stall in Kazakhstan, I'm not going to refer to the Kazakhstani food stall by Mohambavar. I'm going to refer to it as a Kazakhstani food stall. I'm not going to get
fair.
I'm not going to get detailed. I'm not going to tell you the street name, street number. I think that's some common sense.
Can I get a P.O. box?
P.O. box by the camel. I'm sure that Kazakhstanis are very very thrilled by that overgeneralization that just occurred there, but
we'll get some mail about it. It's fine.
Yeah,
it's fine.
But DeepSeek, they had a cybersecurity breach leading to a possible devaluation. If you could,
that doesn't sound good.
If you could invest in it. There was a massive security breach, and what ended up happening was that it was a. I'm pulling it up here now. I need to stop reading the comments. They're distracting me. The website had conversation data. It had username data. It had quite possibly unencrypted password data. It was a huge deal in the cybersecurity world, in that this information was in the clear, and it was not encrypted in any way, and it was accessible. So there was a huge security breach there for.
That doesn't sound good.
No, not at all. So
No.
it seems like the Chinese company, which just as a side project threw their own model together, quite possibly by abducting former girlfriends of OpenAI employees. It's quite possible that they used just plain old HTML and CSS, no JavaScript or anything. So I'm not sure. They need to brush up on their cybersecurity practices, and it's
someone needs to review that. HR needs to take a look.
It's probably a great thing for Sam Altman and OpenAI. I'm sure that the subsequent blowback of that cybersecurity breach quite possibly added a little bit of oomph to OpenAI. But that's DeepSeek. They had their cybersecurity breach this week. They also had a flurry of users hopping on to use the AI. I mean, there's a lot of cool stuff about it. It's supposedly you're able to run it on a Raspberry Pi, which, if you know what a Raspberry Pi is, it's a very minimal CPU. It's just
so it's not something you eat.
No, it's not. It's not something you eat. Yeah. Well,
thank you. Thank you,
Brandon.
You get one. You get one per show.
One per show. You're done. You're done.
I'm done.
But that's my deep thought. That's my deep thought on the deep thought.
I see what you did there. Yeah, the DeepSeek news obviously hit the market. I think it was Sunday, right? We did an episode on Sunday, and you talked a little bit about it. We also talked about the tariffs, and basically what we saw Monday, Nvidia took a nosedive, right? And as you can see here on the chart, right, past couple days, it's kind of leveled off. had a nice little rally on Tuesday and came back down, and I think it's kind of holding steady now. So really, the question now, Ethan, what do you think smart money is doing here, right? So you have the two ideas: dumb money, smart money, right? Dumb money is us, right? The retail crowd, the guy at home on Robinhood, swiping up, buying contracts. Yeah. And then you have smart money, Goldman Sachs, right? Some of the larger firms, larger banks, people on Wall Street. I would venture to say that somebody had some diamond balls and bought the dip on Nvidia on Wall Street on Monday. Somebody bought down there at 117 when it dipped all the way down there. What do you think?
I think so. I'm looking up the max pain for Nvidia.
Oh yes,
I'm
please.
not referring to the wonderful video game series. I'm referring to the open interest chart.
Yes, please.
And
I would love to see what that looks like right now.
We had if you stop sharing the screen, I will take
go for it.
A grab at it. Yeah, we can see some open interest, some volume, and the max pain. The highest put open interest strike is at 110. Calls are at 130. Max pain is 125, and the stock is currently at 123. So it is hovering very close to the max pain point. We've got a put call ratio of 0.7269.
Yeah,
it's not all over the board. But what do you see when you're looking at this chart here with the open interest and volume?
Yeah, I mean, sorry, you kind of cut out there for a second. What do you see when what were we saying?
How do you interpret this chart? Because I have no clue what I'm looking at.
Yeah, well, I mean, open interest is always interesting because you're basically seeing in a snapshot, how many people are involved at certain strike prices, right? How many contracts are open? We kind of talked about on the first episode my AMC position that I dream about every night still, and there were some calls that I had gotten into for AMC back in 2021. It was in April, and I bought some 42 strikes on AMC when it was still right around 20. And part of the reason I did that was because of open interest. It was a 2-3 month out contract. I think they were June expiration dates at the time when I was looking at it in April. And it was a strike price that was obviously way out of the money at that point. But the thing that caught my eye was the open interest. There was a ton of people who were currently holding calls. They were buyers of premium. And so that isn't always going to be an indication that something's going to go up or down if it's on puts. But what it does do is it tells you that, there's a lot of people paying attention to this. Right. There's a lot of money invested into it, right? And you also have to take into account the dollar amount, right? I don't care about open interest on a contract that I can buy for $1. I care about open interest on a contract that is, $100, $200, right? You got a lot of open interest on that. Before you know it, you could have just on that one strike price upwards of, something like 50 million just on that strike. And that's what's important for people who trade options, right? The open interest. So the open interest on Nvidia, I haven't looked at the options chain lately to see kind of where we're at. And this is the first time I'm seeing this graph, but it looks like there's a ton on, I'm assuming green is for calls, right? And it looks like 125. Is that what you said? Is that where the spike is at? So
yeah, max pain is 125. It's currently trading as of close at 123.21. Yeah. Actually, after hours. So it's showing after hours at 10:02.
So I'm assuming max pain is in reference to the sellers of that premium. once we get to that 125 mark, you're gonna have a lot of people freaking out.
We've got some live notes here to talk about max pain, because max pain is a very interesting subject to talk about. Okay.
Yes.
We'll go over the basics. What's the strike price? Strike price is the predetermined price at which an options contract can be exercised. For call options. Yes, we're getting live facts. This is coming in on my teletype as we roll.
You can only get this here on Stonkscast, by the way.
For call options, the strike price is where you can buy the asset. For put options, the strike price is where you can sell the asset. That's kind of basics, right? What is max pain? Max pain theory suggests that by expiration, an asset's price tends to gravitate towards the price that causes the most losses for options buyers. Why is that? Well, that's because the market makers, who are the ones that are going to actually service these options contracts, they
are enemies.
They don't want to pay you. At the end of the day, they do not want to pay you, right? The price...
That's not how they make money.
The price is called the max pain price, and it's the point where the most options for both calls or puts expire worthless. The theory is based on the idea that market makers and institutional traders have an incentive to push prices towards max pain to minimize their payouts. So currently, we're sitting at a max pain of 125. So why does it happen? Market makers hedge their positions by buying or selling the underlying stock to offset their risk. This buying and selling pressure can cause prices to move towards the max pain level. Essentially, it's where the option sellers make the most money and option buyers lose the most money. So we're looking at the option pain or option max pain chart right now for Nvidia. And as far as how we can use it, if you're a short-term trader, you can watch for those max pain levels that are close to expiration and predict possible stock movement. So you can kind of predict, hey, this is getting close to max pain. I understand the psychology of a market maker or an institutional investor. They're going to want to avoid paying out. So they're going to want to push you towards that edge so that you lose out on an option or a call being in the money or whatnot. If a stock is trading above max pain, there could be sell pressure to push it down. If it's trading below max pain, there could be buy pressure to push it up. So knowing max pain will help you decide whether to hold, roll, or close your option before expiration. Max pain is not a guarantee, but it's a useful concept to understand why stocks sometimes move strangely near their option expiration dates. I believe, what's the Greek for that? As you get closer to an option expiration date, is it your theta that's getting ate up or your delta?
So I believe it's delta. Yeah, the theta is the time decay.
Yeah.
Right. So the closer you get to expiration, you're losing a ton of theta. Yeah.
So at last point, option sellers or the market makers, they've got the advantage because they collect premium, while most retail traders buy options lose money. Just the way the game rolls out.
Yeah, generally speaking, sellers at premium make more money than buyers at premium. And, that's just how it goes.
I'd like to thank Frank Bogenholm from Cleveland, Ohio, for sending that live fax in explaining max pain.
Thank you, sir.
Thank you.
So based off of that, right, if the max pain is 125, and right now Nvidia's trading at what? What did you say?
123.21. Good number.
So would you rather be on the call side or the put side based off that max pain?
Well, let's look here at the open interest, because we've got a high. The highest call open interest strike is 130. The highest put is 110. So if your volume, and I believe that's what that's saying, is that there's a high amount of put volume at 110, and there's a high amount of call volume at 130, and the max pain is 125. So if we refer to our notes from Frank Bogenholm,
thank you, Frank.
The stock is currently trading below max pain, so there could be buy pressure to push it up over max pain.
Push it up.
So in that case,
screwing put buyers.
Yeah, screwing put buyers out. So in that case, if you are hitting some calls, but of course we've got a lot of volume at 130, so they're not even those who are at 130 are not going to their options will expire worthless if they push it just to 125. So I don't know where I'd like to be on this. I'd like to be a put boy, hanging out in that 110. But
it just feels like even beyond. I mean, these expirations are what, this week, right?
Yeah.
So tomorrow, they expire tomorrow. I just feel like overall, this dip that we're seeing in Nvidia this week is a massive buying opportunity. I mean, Nvidia lost $600 billion in one day.
That's crazy.
That is absurd. That is the largest. I think I saw it somewhere. It said it was the largest loss. Nvidia sheds almost $600 billion in market cap, biggest one-day loss in U.S. history.
Wow,
that is insane. That's like, how many GMEs is that? What is the market cap of GME right now? That's a lot. It's a lot. It's definitely not 600 billion. I can tell you that much. Otherwise, you'd be a very wealthy man right now.
Because you asked, I'm looking it up.
Yeah, and just to kind of continue on this Nvidia thing here, the decline is understandable. I get it. You know, you get the DeepSeek news that came in. Markets overreact to bad news typically, but one thing that is interesting to note that I saw the other day is that the small caps, right? So going back to those indices that we were talking about, right? The Russell 2000, they're holding up well. Financials are holding up well. And so it's not an all-out, sell-off, which is part of the reason why I think this Nvidia dip is literally that. It's a buying dip, because you have other pieces of the market that are still holding up. So it definitely feels like a buy the dip moment is basically what I'm saying.
Yeah.
So
Yeah. Do a little bit of dollar cost averaging, and you'll get out well. You'll get out well on the other side of it.
And if you want to be a degen and buy some calls on Nvidia that expire tomorrow, then make sure you have appropriate risk and sizing. But no, I personally will not be doing that. But I would be interested in calls on Nvidia for 2 weeks out.
Yeah,
something like that.
Hey, if it goes down, it goes back up, right?
Yeah, it's kind of like a rubber band, right? When you stretch out a rubber band and you pull it, it goes back and forth. That's kind of what we're seeing at times with some of the emotional reactions in stock prices.
Yeah.
So
cool. What's our next point? Do you want to do your HOLO update?
Oh yeah. Oh, do I? Do I? So we have a good friend, Brandon, who is constantly reminding me that HOLO is just not a legitimate company. He's very well right, I'm sure. But it definitely creates some interesting, trading opportunities. So let me share my screen here. So HOLO is, it's how would you describe it, Ethan? I mean, it's a Chinese company.
I personally
and basically
think it's just a Chinese, like it's a shell company that's just taking your puts and your call profits and using that to shunt some money elsewhere.
That could be.
Yeah.
If you take a look here at the 1 year chart, this is just freaking absurd. This stock back in what was this? Almost a year ago, right?
News.
February.
It was on no news either.
No news. Went from, what was this? A low of 24 up to a high of $1,968 a couple weeks later. That's right. You heard that right. $1,968. And so, that caught the attention of all the apes out there and all the degens, of course. And, it's had little spikes here and there. Nothing too major, though. But the thing that's interesting to me about it is basically the fact that you're continuing to get some action on it. So I played this as a trade not that long ago, actually, right around the new year. So basically we went from $1 up to $9. That's insane. It's like 900% return. That's how we kicked off the new year in HOLO. China was like, hey, it's a new year. Let's hype up the U.S. market and send this thing to the freaking moon. And that's what they did. And it's kind of sold off ever since then. But the reason I'm bringing it up now is because basically they came out with news about DeepSeek that they were going to do a partnership with them. And so obviously that is something that, is gaining a lot of attention for those who are interested in trading HOLO. It might be an opportunity to basically trade off that news. I don't know if anything's going to come of it. Got a little spike to, $2. It's currently trading at like $1.55. But they did report that they're partnering with DeepSeek. And so I think as a trader, not an investor, right? As a trader, it is worthwhile to basically have this on your radar. For me, I'm looking to see this thing get above 2 again. And, I want to see volume along with that move. And this thing could make another run. Like I said, we just saw this thing go up to almost $10 a month ago, right? So, I don't know. What are your thoughts on it?
I think any play on HOLO is
highly
speculative and risky.
Yes. Yeah, to be clear, we're not talking investing here. Warren Buffett is not in HOLO. I can guarantee you that.
No. His Coca-Cola is getting warm as we speak right now because he is not taking a sip because he's ashamed of what's happening.
He's not happy about that.
No. I would be interested to know where this volume is coming from.
Where in particular? You mean recently or like at the beginning of the year when we had that spike?
Looks like maybe at the beginning of the year. I was backtracking here 3 weeks ago, but that was the beginning of the year.
Yeah. I'm not really sure. So I got into it when it was right around $5. I wrote it up to 9, which was nice. Fortunately, I was able to take some profit before the massive sell-off there. And that's the thing with this this stock, right? It's a wild ride. And you can't really expect a lot of continuation because it does this almost quarterly, it seems like, where China's like, hey, let's pump this thing, and it'll go up and then sell off, right? And then it won't do anything for the longest time. But if you're able to pay attention to it and see the volume picking up, there's a good opportunity for some nice trades, day trades, even swing trades, right? I think that run up back at the beginning of the year, ended December. It was, if I remember, just looking at the chart here, it was probably like 3-4 days, right, that this thing was active. So, I don't know. We'll see what happens. I have, in full transparency, as a degen, I did buy some calls on it that expire in March. So I gave myself some time, some leeway, and I bought $3 strikes on it. So,
love it.
I'm looking for a move up, so we'll see what happens.
What was that?
But
it's happening now.
Breaking news. Breaking news.
Senior Fed rate Jerome Powell correspondent Michael Wilcox out of Twin Cities is sending me he's sending me a fax as we speak.
Oh yeah, we gotta talk about Daddy Powell, Mr. Money Printer.
This week was Trumpy Boy's first Fed rate decision with Jerome. Mr. Wilcox, thank you so much out in Twin Cities. The The Fed decision in Trump's economic uncertainty. This is happening this week. The Federal Reserve made a decision this week. No rate cuts yet. Yeah.
I don't think Trump liked that.
No, he didn't.
I'm pretty sure he wanted a rate cut.
And you want to know why?
Yeah, I think Jerome's going to pay for that one.
It gave uncertainty. It gave uncertainty. Remember, everybody, the Federal Reserve runs the country. If you ever want to know what's happening, the Federal Reserve cannot be isolated from economic interests. Since our dollar is privatized by the Federal Reserve, it's not in the name. The Federal Reserve is not a federal entity, but it is an entity that controls our money supply.
It makes no sense to me. I desperately need a tinfoil episode from you, tinfoil hat episode on the Fed.
Oh, we'll have one. Here's a key takeaway.
We'll have
one. No clear timeline for future cuts, leaving the markets in limbo. What does that mean? Why is that important? It means that people don't know which direction they're going to go. Are they going to fall?
No clue.
Are they going to go up? How are they going to invest? Are they going to invest in cash, in the U.S. Treasury bonds, which we saw crapping its pants the other day? Or are they going to invest in the markets themselves? So inflation remains uncertain, and the Fed is waiting for more data before making a move. Uncertainty from Trump's economic policies. That's correct, Sugar Booga Mama. They are more secretive than the CIA.
That's scary.
The Fed is closely watching Trump's trade and immigration plans and their impact on inflation. Potential tariffs and mass deportations could drive up labor and consumer costs. That's right. Your best friend Paco, he's getting out of here. And you know what? That means that you're not going to be able to get your drywall done this weekend. So you're going to have to do it yourself. You're going to have to go to Lowe's. You're going to have to get the spackling. You're going to have to get the tape. And you're going to have to do it yourself.
Nobody wants to do that.
Yeah. So the market impact. Uncertainty may keep stocks volatile, especially in industries sensitive to policy shifts. And inflation and jobs. Where do we go from here? Inflation has cooled but remains sticky in key areas. Don't you just hate it when your key areas are sticky? I sure do. That's why that's why our sponsor this day is Manscaped. If inflation resumes its pullback, a rate cut could still be on the table later this year. That's right. That's right. What's scary is they are more powerful than Trumpy Boy. They definitely are. They hold the purse strings, which means they hold the direction of the country. What this means for stocks and crypto stocks, interest rate sensitive sectors like tech, QQQ, and the real estate could see hesitation from investors. Crypto, lower rate expectations might delay the next big rally, but uncertainty could still fuel volatility. And as far as bonds are concerned, the market is still betting on cuts later this year, even if the Fed isn't confirming them yet. And we all know, when they say the Fed, they mean Jerome, Mr. Money Printer J. So what do you think about the Fed stance? Will rates stay higher for longer, or is a cut coming sooner than they're letting on? Why don't you drop your comments down below? Let us know.
Boom.
Yeah.
What's Daddy Powell going to do?
Yeah.
What's he going to do?
Thank you so much, Michael Wilcox out in Twin Cities, our senior Jerome Powell correspondent. He's been watching Jerome for the past 3 weeks. He has not left his vehicle. He is in a Toyota Sienna, and it is stinky. He FaceTimed me earlier this week, and I saw that there were multiple Coke cans, and most of them were not full of Coca-Cola.
I just want to say I really appreciate Michael. He's doing some really good work for us out there.
Yeah.
I mean, that guy has not gotten any sleep in the past 2 weeks.
Really, yeah. I don't know why he's out in Twin Cities watching Jerome Powell when I'm fairly certain Jerome Powell is in the temple itself, but yeah.
Well, he hasn't had a lot of sleep, so he's a little disoriented. It makes sense.
Okay, we went over the Fed rate decision, DeepSeek, HOLO, a market update. I can give you a GameStop update real quick. Would you like that?
Oh, I would love that. Are you kidding me?
The GameStop update for today is there was a massive 42.2K share purchase after hours. Wow. That was crazy. That's a $1.18 million purchase after market hours. Additionally,
be honest, was it you?
It was me. You got me.
I know it. I know
Me
it.
and Michael Wilcox, we tossed a couple coins in the coffer and we went for it. Additionally, Ryan Cohen made a change where he made some structural changes to move his GameStop stock from RC Ventures LLC to him as an individual. It sent the subreddit Super Stunk in a flurry as people were wondering what was happening and why this was happening in the middle of nowhere. There was nothing that they felt, could drive this decision, but it's okay. At the end of the day, GameStop had a closing price of $27.99, so they were up 1.74% and up 48 cents on the day. So that is your GameStop update.
Amazing.
Yeah.
Thank you for
You're
that.
welcome.
Oh, man. It's going to be a glorious day when that thing moons again.
For the last time, because Daddy needs a retirement.
Daddy needs a retirement. That's true.
Okay. And
what else we got?
Think,
Is that about
I've
it?
got one more thing to look at. We're going to briefly look at the crypto for the week and see where everything went. At the end of the day, we had some ups and we had some downs. What ended up happening was everything just stayed steady. I can't find it. Where did you go, sir? Multiple trading here. Yeah, at the end of the day, what ended up happening was Sunday before all of the markets opened.
Craziness.
We had some big drops everywhere. It was red. It was bleeding all over the crypto market. But as far as Bitcoin is concerned, it's pretty much leveled back out to where it was at the beginning of the week. Ethereum has actually seen a consistent drop. Well, it bumped back up, but it's not back up to where it was prior to. Binance Coin, Tether US, it's kind of staying where it was at before. So most cryptocurrencies kind of bounce back up to where they were previously. But yeah, so that's our crypto update for the week.
Be really curious to see what Bitcoin looks like over the next couple of weeks with the rate news that was no news, I guess.
Yeah, no news, so nobody's going to want to put anything probably into cash because the U.S. Treasury bond, as we went over the other week, was going crazy. There was volatility. Yeah. Nobody wants to put money into the market. So, yeah, you're probably right in that putting money into Bitcoin is a good option right now because you're going to see some bounce back from Bitcoin.
You'll see some return there.
Yeah.
So. All right, what else we got? Is that it?
ASML earnings on Wednesday morning, Tesla earnings Wednesday afternoon, and Apple on Thursday afternoon. Is that this coming up week, or was that this week?
No, that was this week. Yeah. Okay. So Apple actually reported this afternoon, and I think they had some positive earnings based off of what I saw. It looks like their revenue was decent, and that's important because right now it's the largest company. Yeah,
good job,
round of
Mr.
applause
Cook.
for Apple.
Oh my gosh, good job, Timmy.
Good job, Mr. Cook. We love Cook. That's great news for the market, I think, because it is the largest company, and so everyone has eyes on it for earnings, right? So yeah, and ASML is important because it's in the semiconductor area. So definitely something to keep eyes on. And then Tesla had earnings yesterday that were not that great overall, but their Q4 revenue went up a little bit, and so it dropped like 40 points and then climbed like 50 points or something like that. It was insane after hours. So definitely something to keep an eye on over the next few days and heading into next week. See what Tesla does. Really all the Magnificent Seven, right? Apple, Tesla, the big boys, right? We'll see if they can hold up the market. So
I like it. Well, hey, that was it. Thank you everyone for joining. Whatever platform that you're watching from, you can like and subscribe. If you go to our make sure that you also interact with our podcast on Apple Podcasts if that's where you listen to it. But that's all that we've got
Thumbs
for today.
up.
Thumbs up. That's all that we've got. Brandon, what about you? What do you got?
I think that's about it. I won't bore anybody with my best buy position, but I saw some nice open interest, as we talked about earlier, on an 88 strike that expires tomorrow. So I'm feeling good about my contracts that are good for 2 more weeks. So we'll update you on that next time for anyone who cares. And beyond that, I think that is about it. We're going to try and do another episode, I think, on Sunday. So keep an eye out for that. Yeah, like and subscribe. And please, please, please remember, plan the trade and trade the plan.